I want to be completely honest with you guys. The charts just don't look very good right now. We continuously keep dropping levels of support and keep going lower and lower. And I wanted to get into a video today about what we have to do to reclaim the possibility of a bull market and a little bit of the reason on why the market, and not just the crypto market, but the stock market itself, has been going down today and what it might mean for the future. All right, guys, I wanted to first start talking about the crypto market before I went over the overall broader market and why we overall went down as a whole today, and what we need to see in the crypto market to regain some resemblance of hope that the bull market isn't over just yet. And the big thing we have to do is get back up to the 50 weekly moving average, because we already closed one weekly candle below that weekly moving average. And if we close two, that basically signifies that the bear market is here, whether you want to admit it or not. And my big concern with us needing to do this is we have to make almost a 20% move in Bitcoin right now. Now, we already got the FOMC minutes, we already got the jobs report, which was fairly good for the market, but it clearly didn't matter anyways. We continue to dump as it is. So my question is, with 3 days left before the weekly close on Sunday, what could the possible catalyst be to make this 20% move to regain this 50 weekly moving average? And to be honest with you guys, I don't have anything that comes to mind or any catalyst that could happen that could propel this move. If it was like 5, 7, 10%, like, I could see it being more possible. But after the move we've made, for us to move back up almost 20%, I just don't see it happening right now. And that's not me saying that necessarily, oh, we keep going down. We could have a move up, but I don't see us making a 20% move, almost $17,000 up to about $103,000 in the next 3 days, unless some wildly unexpected stuff comes out that nobody saw coming. But the general state of the market and the uncertainty in the market, I don't think is going to allow for that. And in addition to that, you have to think that a lot of the reason that all this selling has been happening is because a lot of the people who believe in the 4-year cycle have sold their bags, and they're now waiting for, the bear market to set in. And if you believe in the 4-year cycle, then you also go by the fact that we should bottom about a year after the top. So my other concern is, even if we do get some good news, are there enough buyers out there to really make this move happen? Even if there's enough news, because a lot of the 4-year people are going to say, even if there's a little pump here, it's going to be a fake out and it'll eventually go down more anyway. So I'll wait for a lower buy. And between those two things, I have a really hard time understanding how Bitcoin makes this move. And if Bitcoin doesn't make this move, then this is either one, the biggest fake out that has ever existed, or we're just in a bear market and we may make some move back up, but ultimately we're just going to keep going. We're going to keep trickling down as time goes on. Now, we have gotten some decent news over the past day, with the jobs data actually being relatively good and Nvidia earnings being good as well. So you might ask, why did the market go down despite these good reports? And as I've said before, the market is always forward thinking. And the one thing about cryptocurrency being a risk on asset is, anytime there's turmoil in the market, then risk on assets are the first one to get money pulled from them. So I want to go through this article right here with you guys. It's a little bit of a read, but not too bad. But it's some very important information, giving us a good idea into what's going on in the market as a whole, globally, going forward. So here we go. While no single factor is solely causing a full-blown crash, Japan's recent monetary policy shifts, particularly the Bank of Japan's decision to raise interest rates for the first time in decades, are a major catalyst. This is amplifying a broader sell-off driven by tech sector weakness, soft U.S. labor data, and geopolitical tensions. Here's a breakdown of why Japan is at the epicenter. For over 3 decades, Japan maintained ultra-low interest rates to combat deflation and stimulate its economy. This created a massive yen-carry trade, Investors and institutions borrowed cheap yen, converting it to higher yield currencies like the US dollar, and poured the funds into riskier assets worldwide, like Bitcoin, for example, especially US stocks, tech giants, Nvidia, Apple, and treasuries. This influx fueled the post pandemic bull market, inflating asset bubbles globally. Japan became the world's largest foreign holder of US treasuries at 1.3 trillion, propping up liquidity and keeping borrowing costs low everywhere. Persistent inflation forced the BOJ to hike rates in late 2025, something they haven't done in decades. This made borrowing yen far more expensive, prompting a rapid unwind of carry trades. Investors are now selling global assets, stocks, and bonds to repay yen loans, creating a cascading sell off. Japan's government bonds are seeing a historic sell-off. The 20-year JGB yield spiked to 2.75, a record high. The 10-year to 1.8, about highest since 2008, and the 40-year to 3.7, all-time high. This is driven by fears over Japan's ballooning debt, 263% of GDP, the world's highest, and fiscal stimulus under the new leadership, which could exacerbate deficits. And you can see here, just reading this, you can tell this is like a bubble that's about to burst. And also, as a lot of people have been saying, we could already be in a recession in the United States. So when you put these two problems together, you can start understanding why there's a lot of sell off happening in Bitcoin, a risky asset, in the stock market. These catalysts are coming together, and the market is not liking it at all. Higher yields mean Japan's pension funds, banks, and corporations heavily exposed to the JGB face massive losses. To defend the yen and stabilize bonds, Japan may sell US treasuries, pushing up US yields, which in turn spikes mortgage rates, cools housing, and pressures consumer spending, rippling into stocks. The yen has plunged to near 155 against the USD, a 30-year low, and 180 against the euro, adding abnormal volatility and fueling export gains short term but eroding confidence long term. In Japan's stock market, down 12 to 22% from July highs, entering bear market territory, the worst drop since COVID-19. Tech-heavy firms like SoftBank down 10%, and exporters are hit hardest amid yen weakness and China tensions. Up to 500 billion could flow out of markets in the next 18 months as carry trades reverse. U.S. Um, fell 1 to 2% on November 18th to 19th, with tech leading the decline. Asian markets dropped 1.5 to 2.6%, and Europe stocks 600 is wobbly. So this is all to say that a lot of this sell-off is due to people selling not only riskier assets but also stock to pay back their debts, so before the rates go up and it costs more to do so. And this is something that could continue to get worse because Japan, the leaders have a meeting in about a month, and they could choose to increase rates at that meeting as well, and that would just make the problem a lot worse. And that's why, like I said, the market's forward thinking, and this is causing ripples through the entire market. So I'm going to keep an eye on this. I would recommend you guys do the same because this could have continuing negative effects on the market going forward. And, like I said, with Bitcoin needing a 20% move just to break up to the 50 weekly MA, you could start seeing how there's just too many things going on that would prevent that move from happening. Those are my thoughts on the situation. I'll see you in the next one.